Hi, this is Dennis Fassett, the Cashflow Mercenary. I've got two words for you. 8%. Well, 8%, what's the significance of 8%? Well, 8% is what I pay my private investors when they invest in my single-family houses. I pay them 8% fixed for a period of years, generally 5 years fixed. Once in a while I'll do interest only, but generally it's 5-year fixed, 30-year amortization. Again, pretty boring fixed rate of return. It's a little bit higher than what I'd normally have to pay if I could get a conventional mortgage, but since I've got my limit of conventional mortgages, that's not an option for me, so I've got to use private investors, and so I sweeten the pot a little bit for them and pay them a little bit more than I'd have to pay otherwise. Okay, 8%, not too bad. On the flip side, I know a lot of people right now in the marketplace that would absolutely kill for 8% return on investment in this market, especially in the stock market, what's going on with what's happening right now. 8% consistent, guaranteed 8% return would make a lot of people very happy. And I say this because I had a conversation with one of my private investors a couple of weeks ago about just this topic. What I like to do is every once in a while is drive a check over to my private investors just to keep the lines of communication open. To be honest, being one of my private investors is probably one of the most boring things you could ever do. You get paid on time, actually usually early, and the checks just keep coming. I've never been late even a single day on any of my payments, so it's pretty boring. So what I do is every once in a while drive them over, have a quick cup of coffee, and just chit chat to shoot the breeze, just to keep the lines of communication open. So did that a couple of weeks ago, and sat down with the buddy of mine, and we were kicking around this 8%. He was lamenting to me the fact that he was only making 8%. Oh, woe was me, 8%, when the market's done 30 blah 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 percent since March. Well, like anybody realized in March when the Dow was cratering that was the time to get in. I don't know anybody that jumped in with both feet. I know some people that got in a little bit and put a little bit of money and have done pretty well, but I don't know anybody that got in with both feet. So anyway, he's lamenting to me that, oh, if you would have done this, oh, if you would have done that. And I just said, listen, you're on crack. Let me tell you, let me give you some facts. And what he didn't know is that I had recently given a talk on my 105-100 retirement plan, and I'd done some analysis of the market and what the market's done. It turns out that with my little boring 8% fixed rate of interest that he's getting from me, he's actually, at this time in the year, on August 31st, he's ahead 10% of where he would have been had he been in the stock market. 10%. It's not insignificant. And let me tell you what that means. Right now, the stock market, from the day I closed on the house and he invested in this rental property, the stock market is 2% shy of just breaking even from that point. So we need a 2% increase in the stock market for him to break even to where he was the day he closed we closed on my rental property. That's not even withstanding the 8% profit that he's going to make, the 8% return on investment he's going to make over and above that. So right now he's 10% of where he would have been had he been investing in the stock market for the same period of time. Again, that's not too bad. And again, I think that like attracts like, and so my private investors are a lot like me. I'm a corporate finance guy from way back, so I've attracted some private investors that are financially savvy. A couple of them are in money management, and this guy knew better. He knew that he was probably at least a little bit ahead right now, but he's just trying to give me a bad time and give me the oh woe was me thing, because as you know, hindsight is always 20/20. Well, I want to take that as a segue into something else I've got going on. You may have received a notification invitation, but I've got a webinar that I'm hosting tomorrow, Tuesday, September 1st, on this 105-100 retirement plan. And basically my purpose is for folks like me that are behind in your retirement savings. I'm in my mid-40s. I was behind in my retirement savings. This is a way to turn $100,000 in a retirement account into a $100,000 per year retirement income within your lifetime. And it's without using stocks or bonds or any of the ways we've always done it, because those ways are proving to be challenging at best to maintain at least consistent returns. So if you've received the invitation, or if you've not, on this Facebook page at Michigan Rental Home Investing, just scroll down a little bit. You'll see the listing for the webinar. Go ahead and register for it. Again, keep in mind that it's limited to the first 20 people that log on. I've got a limited number of slots. So if you're interested in learning more about this 105 or 100 retirement plan, get registered tomorrow. It's at 7:30 p.m. Love to have you on the webinar. I think it'll be a worthwhile way to spend your time tomorrow, if I can say that correctly. This is Dennis Fassett, the Cash Flow Mercenary, and again, I appreciate you tuning in, and we'll talk again real soon.